Hi guys, welcome back to the channel. Today's video we're going to be reflecting upon June's performance within the portfolio. We'll be reflecting upon a few different aspects including the buys and sells, the dividend income, and of course looking at how the portfolio value has been decreasing alongside the market. So without further ado, the first slide we've got here is this year's performance within the market, where we can see from January, month after month, we've been grinding lower and lower and lower. For this month, we end up with £81,214. which is down from 88,000 at the beginning of the year. I also like to look at this on a quarterly basis, as June is the end of the second quarter of the year. I've inputted this month's data. When we look further back, we can also see that the portfolio has been in an uptrend, but since about Q2, Q3 2021, it's been going a bit sideways, and then it's also started to decline as we've entered into 2022, which is right alongside what the market has been doing. I wanted to add this information in, which shows you the portfolio value alongside the cash position in each month, and I've got to say that I haven't added any fresh capital into the portfolio, and this is mainly because I don't have the funds to do so, and what I've been doing recently has been selling stocks from the start of the year to try and raise cash within the portfolio. And the reason I don't have the funds available is 2022 is a bit of a perfect storm for everybody, but alongside that I've had my 30th birthday this year, which we've celebrated, my wife's 30 this year, the two cars that we have are on 3-year leases, also up this year, and since September we've been on 3 holidays enjoying ourselves, so we've had a really good time nonetheless, but that comes at quite a high cost, as you can imagine, and I don't have any excess capital at the moment to put into the market, which is why I've been buying and selling stocks as I do most months. But the portfolio value from January was 88,000 and I only had 4,000 cash, whereas if you reflect that now, the portfolio value is 81,000, but I've got a heap of cash of 20,000 sitting there, and I really am looking to deploy that in the second half of the year. Asset allocation, we're still heavily weighted towards international shares, which is mainly the US, where it's equated to about 38.8% of the portfolio. UK shares at 26.8%, cash quite high at 25.4%, property we've got 6.4%, which again that will come under international shares, funds, and that is really to do with one of the MLPs that I've got within the portfolio. Digging a little bit deeper here, and we can see how this allocation is broken down even further. Technology 14.2%, telecommunications 4.3%, financials is where I'm most heavily weighted at the moment, is 18.1%, real estate 6.4%, consumer discretionary 13.3%, consumer staples 9.6%, healthcare 6.1%, unclassified, and again that's probably going to be the MLPs, which I've got, energy transfer about 2.4%, and we also have that cash position of 25.4%, which gives us the full 100% allocation within the portfolio. So on to the dividends now, and I was a little bit slow in getting this out, so July's actually recorded one payment here which adds to the total income there of £1,028, but June as a whole I got £76.20 and it was the lowest of the year, and that's mainly down to two reasons. Reason one is obviously I've been buying and selling stocks and that will be affecting some of the dividend income that's coming through, and also some of the reallocation that I've been doing over the last sort of few months has been more into UK based companies which release their dividends semi-annually on most occasions as opposed to quarterly like the US companies do. 3 payments made up this £76.20, where we had Organon at 58p, Walgreen Boots £24.85 and BAE Systems with £50.77. Looking at the entire dividend income that I've ever received, this is now being added in here with the purple colours reflecting each of the dividend payments this year. It is the lowest that we can see here, even for the month of June over the last 4 years, where it's varied from £41 up to £113, up to £233 last year, and now we've right down to £76.20. But overall, throughout the course of the year, I do think that'll be either flat or marginally higher than what I was last year, but again we'll just need to wait and see how that unfolds throughout the rest of the year. Total dividend income ever received is up at £5,446.67, and I said we're bang on the halfway mark throughout the year, so looking at what I've got just now, £1,007 there, if we double that we might be flat for the year, but I said we'll just need to keep an eye on that for any opportunities that arise in the market, because to be honest the dividend stocks is what I'm looking at the moment that I want to be adding into the portfolio. I've been buying some growth stocks heavily recently, and I think I'm probably fully allocated for the time being. Looking into what stocks I've been buying and selling this month, and I've got 1 buy and 3 sells. So without further ado, we'll go through the 3 sells first and then into the buy. So one of the companies that I sold it's a small Scottish company named Iomart, who are based in the sort of data industry, mainly about the data centres and IT security. I bought this company a while back in November last year where I spent about £2,300, equating 1,493 shares within the company. The share price has been in a bit of a counter trend to the market, where this company previously did have a sale of about 50%, and I deemed it to be fair value. And now that it's run up a little bit, I'm looking at it again. This could continue. There's a good trend line there, but for me, I feel like taking the profits. I sold for the total value of £2,817, as well as a dividend payment of £36.13. It gives me a capital appreciation gain on this company of £518.87. And again, the total gain, when we equate the dividend into that, is £555, or 24.1% in the position. And when we reflect upon how poor the market's been doing, and only holding this for about 67 months, getting a 24% profit on the one company, delighted with this one, to be honest with you. Second stock is BAE Systems. When we see the chart here of when I bought this company, it had a little bit of a hiccup a few months after it, but due to the unfortunate circumstances in Ukraine, defence stocks really have outperformed the market, and we can see how this uptrend since February has been pretty evident, and it's at all-time highs. Could it go higher? Absolutely. But for me, again, it's a small position. I only bought about £1,600 worth, or 334 shares, back in the 27th of July last year. Sorry, July 2020. So I've actually held this for a good bit of time. And I sold it for £2,521.14. And I've also got some hefty dividends that have come through the door, where you can see back in 2020 out to 2022 with £46.31, 47, 33 and 50. So the overall performance in BAE Systems, it equates to capital appreciation of £901. Dividend payments equated to £209.09, which gives me a total gain on this position of £1,100.63, or 68.5% of the capital invested. Upon reflecting upon how the market's been performing, really delighted to take the profits on this one and hold it in cash for the time being. So that gives us the June 2022 trades, a total gain of about £1,655.63. And as I showed at the beginning of the video upon how I've been raising the cash position, it's been through buying and selling stocks. May recorded a heavy loss due to one of the cannabis companies I invested in a long time ago. Really made a mess of that decision, and I thought it was time to just cut my losses and move on. But overall for the year, we're still generating profit realised gains, which is what I'm looking to do just now, as I said, to get the cash position up. On to the fresh buy that we've got. It's an existing position in Medical Properties Trust. Picked up 55 shares at a price of about $17.38. Shortly after, it did come down to $15, but I've just held my hands on that one. I've spent £762.16 to get these 55 shares added to the portfolio, and if they keep the dividend, which I'm hoping they will do, it's a good yielder. Saving the best till last, we'll have a look inside the portfolio from top to bottom, inside out, to see exactly how we're sitting. So total value is £81,300. The market is open just now in the UK, so this might fluctuate a little bit up and down as we're speaking. And we've got that cash balance on the sideline of £20,288. And from top to bottom, we've got Alibaba down 36%, closer to 37 to be honest with you. Alkaline Water down 44%, Alphawave down 43%, Barclays break even, Boohoo down 52%, Citigroup down 11%. Coupang down 18%, Darktrace down nearly 40%, Energy Transfer down 31%, GAN down 69%, Goodbody Health really made a mess of this one, down 95%, Green Core Group down 26%, GSK breaking the trend, up nearly 20%, JD Sports Fashion down 5%, JP Morgan down 4.5%, Leggett & Platt up 4%, Medical Properties Trust down 9%, Micron down nearly 11%, Money Supermarket down nearly 30%, New Residential Investment Corporation up 4.5%, Palantir down 34%, Polar Capitals down 22%, Smith & Nephew down 7%, SoFi down over 52%, Store Capital down 1.76%, and Tattooed Chef down 41%, with Vodafone down marginally at 6.5%, and Walgreens being a real surprise one. Given all the poor performance, we're still actually up 1.5% on the position. So that equates to unrealised loss of $22,500, or we're down 26.9% of the capital we have invested. So again guys, if you enjoyed the video and you stayed till the end, please drop it a like and subscribe to the channel, and I'll catch you all in the next one. Cheers!